Geely, who owns a handful of auto brands including Volvo and Polestar, has developed an extremely long-life battery technology that has class-leading energy density and charges quite fast as well. Stick around as I discuss what we know so far about this exciting LFP battery technology.
I believe a lot of people concur that Ron Barron is an excellent illustration of a long-term hold investor. I would invest more money if I had more to do so. Elon has every right to be furious with the short sellers after all. It is inexcusable for someone with Bill Gates' caliber of life to short sell Tesla. Elon is warning people that Bill Gates is going to be destroyed, and I interpreted that to indicate that even a millionaire like Bill Gates may lose all of his billions. It's not Elon's fault that he isn't forgiving. Hi to all of you. We're delving into some fascinating news from the world of investing today. Prominent figure in the finance world, Ron Barron, has opened up new funds aimed at Elon Musk's SpaceX and XAI businesses. Let's examine this and the reasons behind the buzz. Please show your support by liking this video and subscribing to Tesla Stock News before we begin. That being said, let's get started. Ron Barron is a visionary investing in the stock market who is likely to reap greater rewards in the long run. He is not simply another investor seeking for immediate profits. His most recent action is the creation of specialist funds that allow investors to directly invest in Elon Musk's SpaceX and XAI, two of the most cutting-edge and talked-about private endeavors of our day. These businesses are not only pioneers in their industries, but they are also pushing the limits of technological advancement, from artificial intelligence to spaceflight. Yet Barron's approach extends beyond simply making investments in expanding industries. With an eye on the future, he wants to lay the groundwork for a firm that will last for a century. This is about building a legacy of innovation, stability, and vision in an increasingly volatile market. It's not simply about making money. Barron is taking a risk by investing in startups like SpaceX and XAI, which may determine the direction of humankind in the future. His obvious motivations reveal a great deal about his business philosophy. It's not just about making money, it's also about becoming a part of innovative projects that could completely transform entire industries or even daily life. In addition to attempting to secure the survival of his own business, Barron places his clients at the forefront of technology breakthroughs by matching his investments with forward-thinking businesses. This approach demonstrates a thorough comprehension of market dynamics and a strong faith in the revolutionary potential of technology. In a world of finance that is frequently defined by quick profits and huge turnovers, it's a daring declaration. One could argue that Ron Barron's action is a masterpiece in strategic investing, one that other investors, particularly those who wish to secure a stable and prosperous future for their businesses, may draw inspiration from. And here's the thing. Barron charges a 1% management fee for these investments in an effort to keep costs reasonable. That's pretty refreshing in the world of high investment expenses these days. The worst part is that investment funds are locked up for 8 years. Folks, that's a long commitment. When SpaceX or XAI goes public, the cost even decreases to half. It appears that Barron is placing a lot of money on these businesses to go supernova rather than just make a large splash. Although a 1% fee seems reasonable, what would happen if Elon decided to start producing flying cars or other incredible things? Still a fantastic offer. Barron's plan of action doesn't end there. By increasing the visibility of his company with these special funds, he is laying the groundwork to draw in more business for other investments. It's similar to using a well-known performance to sell out smaller events. Astute, huh? It sounds like a millionaire boys club, Ron Barron and Elon Musk. Is this another rich-get-richer ploy, or may the average person have a piece of that pie? Here's an intriguing fact. He serves offshore investors who are exempt from paying taxes through Barron Cayman. Barron has made a name for himself since he started his business in 1982, with just $10 million in funding by supporting outstanding CEOs, and who makes more news than Elon Musk. Disparaging each other, Gates and Musk are akin to a billionaire Twitter feud. Take a bite out of the popcorn. Let's change our focus and discuss Bill Gates. He recently voiced his displeasure at Musk's obsession on culture wars rather than climate change. Recall that the relationship between these two has not been smooth, particularly since Gates was discovered shorting Tesla shares while attempting to get Musk to support his charitable endeavors. Gates anticipates that Musk will refocus his enormous influence on advancing green technology, a sector in which both have made significant financial and emotional investments. It seems like Barron has the Midas touch when he bets on outstanding CEOs, but are these tech titans overly preoccupied with the spotlight? Controversy is nothing new to Elon Musk, and lately he has taken a dislike to short sellers. He contends that their activities have hurt Tesla's long-term prospects, in addition to causing an unnatural surge in the company's stock price. Musk is more than just a critic of market mechanisms. He has strong personal feelings, particularly toward people like Bill Gates. Gates' short selling of Tesla is seen by Musk as a betrayal, especially in light of the wider ramifications for climate change initiatives. For Elon, it's about the globe, not just profit. It's like David versus Goliath as Elon takes on the shorts, but who is the true big in this tale? When it comes to the future of our world, short selling feels like betting on failure, which is wrong. Delving further into the dispute, Musk and a large number of his backers are resisting what they see to be nefarious market manipulation. Consider Jim Chanos, a short seller who lost millions of dollars when he bet against Tesla. His fund ultimately closed as a result of his bad trading choices. This case strengthens the claim that disseminating false or deceptive information regarding firms such as Tesla is not just immoral, but may even be illegal. If false information can influence stock prices, should the laws governing what can be said about a firm be more stringent? With a history of antagonistic interactions with people who have bet against his firm, Elon Musk's claim that the perfection of Tesla's autonomous driving technology will eliminate short sellers is more than just hyperbole. Musk has observed throughout the years as short sellers who have lost billions of dollars, such as David Einhorn, have suffered severe financial losses. The enormous $8 billion loss Einhorn incurred between 2016 and 2021 is evidence of the dangers associated with undervaluing Tesla's potential and durability in the market. The same lesson is reinforced by Gabe Hoffman's recent $100 million loss in 2023. Betting against Tesla is not something that should be done lightly. These are not just personal tales. Rather, they highlight a larger trend in the risky field of technology investing, especially in fields where groundbreaking advancements like autonomous driving are driving growth. Not only is Tesla creating new products, but it's also pushing the frontier of technological feasibility, changing entire sectors in the process. In addition to questioning a particular company's financial measures, short sellers who wager against such a company are also wagering against the advancement of technology and the evolution of the market, which could suddenly make their positions unfeasible. Furthermore, Elon's cautions are taken seriously and have an impact on investor behavior and market views. His faith in Tesla's potential, particularly with regard to obtaining complete autonomy, poses a serious risk to short sellers' financial and psychological well-being. If Tesla is successful in refining its autonomous driving technology, it will be a financial as well as a technological triumph. If this technology proves to be successful, Tesla's stock value may rise significantly, putting short sellers in a risky situation where they may suffer exponential losses. The ongoing struggle between Elon Musk and short sellers is a microcosm of the larger struggle between traditional market skepticism and innovation-driven growth enterprises. Every loss suffered by a well-known short seller is a sobering lesson on the dangers of placing bets against businesses that are at the forefront of momentous technical advancements.